Excellent. Thanks for that kind introduction, Michael. It feels like I should ask everyone to move forward, but we'll just leave it as it is for now. So in the next few minutes, what I want to do is take you and share with you the Atlantic Lithium story. I want to tell you more about our flagship project in West Africa, and in particular about our track record and what we are planning to do to be the first lithium producer in Ghana. On the screen, what you can see is our in-country team, what is overwhelmingly Ghanaian nationality. What is nice about this is we were able to work through COVID last year without any disruptions because we didn't have to move anyone in and out of country. So we did our biggest drill campaign in a single year during the COVID period. And that drill campaign has fed into our latest MRE update. Excuse me, I just want to, am I pointing it in the right direction? Yep, there we go, excellent, thanks Michael. So in terms of the history, we picked up the tenements in 2016. We started the beginning of last year with a 20 million ton resource. We subsequently moved that up to a 30 million ton and then again to a 35 million ton resource in February this year after completing the 60,000 meter drill campaign in 2022. Last year's drill campaign was mainly focused in increasing the confidence level in our ore body, as 2/3 of the drill holes was designed as infill drilling, and that yielded successful results. We now have almost 80% of our resource sitting in the measured and indicated category. The additional 20,000 meters was targeted at resource growth. In total, on the project, we have now drilled 137,000 meters. So on average, that has yielded 255 tons for every meter we drilled in resource. We operate in a very stable mining jurisdiction. Ghana has been mining gold for over a century. The framework is clear and the pathway to permitting is well laid out, and there is clear boundaries of what we need to do to achieve the next level of permitting. In terms of project economics, they're just exceptional. I'll talk a little bit about that later in the presentation. But in summary, the payback period is measured in weeks, not in years as it typically is. We also believe there's a great upside to the project. We've only drilled out 15% of our 560 square kilometer tenement holding package in Ghana. However, our focus at the moment is to bring this project into production, and we are targeting first production within the next 2 years. Looking at our capital structure, the company has a market cap of $300 million. We are listed on the London A market and also here in Australia and on the OTC. We have a healthy cash balance for an explorer and junior developer of $19 million. In terms of shareholders, we have some very strong shareholders on the registry with a 25% stake held by COO International, which is a South African group with interest in iron ore, manganese, and chrome. They have been on board with the company for the last 9 years, which was prior to the Atlantic spin-off from Iron Ridge Resources. And they have a real interest in our Ewoyaa project. They have a creep provision of 3% every 6 months, and they have been fully utilizing that, and it appears that they continue going to increase that 3% every 6 months going forward. And then next up at 10%, we have Piedmont Lithium, who is also our partner in this project development, and they are also sitting on the topco level. We have an experienced board led by Executive Chairman Neil Herbert. Also on the board is our CEO, Len Kolff, who was instrumental in the discovery and the development of the Ewoyaa project with his team, joined by Amanda Haases and Stu Crow, who is also the chairman of Lake Resources and RICA. We have representation on the board from COO International in Kieran Daly and Christelle van der Merwe. Piedmont Lithium has not yet exercised their right to have board representation. We are continuing to build our management team as we de-risk and progress the project, with recent appointments of myself and Ruth Blanche as project manager. Then we have 2 exceptional gentlemen based in country, Ewan Williams as our exploration manager and our in-country manager, Abdul Razak. So what are we about? Our vision is to produce a sustainable lithium supply with positive social impact to support a global transition to a carbon-neutral future. I want to share with you 3 things that I believe makes us unique and best in class. First of all, we have a great strategic location. We are 800 meters from a paved road that leads to the deep-sea port of Takoradi, which is 110 kilometers west of the mine site. They currently export vast amounts of bauxite and manganese, almost to the tune of 4 or 5 million tons per annum, and they have sufficient capacity to export our product as well. We have access to power, with a power line running across the mining footprint that is supplied from a mixture of sources, including hydro and solar. Due to the nature of our mineralization, our stage 1 development is a DMS-only process, which require very little power inputs, and we have exceptional project economics, which I'll discuss shortly. One of the key things about any lithium project is the mineralogy. Our resource is predominantly coarse-grained spodumene, which lends itself to simple gravity process flow sheet. With low contaminants observed in our DMS test work, as low as 1% iron and less than 3% sodium and potassium oxide combined. We currently have a resource of 35 million tons that's grown over the last 24 months, which is really nice to see is that the grade has stayed constant as we've upgraded from 20 million tons to 30 and then to 35 million tons. Our maiden reserve is 19 million tons, which we declared in our PFS. We also have the first 18 months of production drilled out to the measured category that further de-risks the project. The PFS that we released in September last year shows exceptional project economics, noting that this was still based on our 30 million ton resource and a throughput rate of 2 million tons per annum. On this basis, the project has a post-tax NPV of $1.3 billion with a payback period in just under 5 months. The average life of mine SC6 pricing we used in this model was $1,360 per ton. From our PFS, our production output is targeted at 255,000 tons of SC6 concentrate, of which 50% is destined for Piedmont's hydroxide converting facility planned in Tennessee at market rate prices. The PFS capex is estimated at $125 million, of which Piedmont is almost contributing $100 million to earn into 50% on a project level. So indeed, very little additional funding required beyond that contribution from Piedmont. Half of our production remains unencumbered, which places us in a favorable position to raise funds for any additional capital requirements should they arise. One of the aspects we're extremely proud of is the economic benefit that stems out of this project and that flows to the people of Ghana. Over the life of mine, we will contribute just over $3 billion to the economy in the form of taxes, royalties, wages, and a community fund we have set up that will directly benefit the community in the surrounding areas around our mine site. In terms of where we are taking the project next, we are well advanced with our feed package and DFS, both being delivered in Q2. Our highest priority this year is to complete the permitting process. That is the mining lease approval, which we submitted in October last year. On approval, that will trigger the EPA process. After ratification of our ML by Parliament, the final step in the process is the mine operating permit, allowing us to be in production within the next 2 years. We are taking a staged approach to our development program. The stage 1 is the DMS plant utilizing 3 different size fractions to narrow the size distribution band and improve metal recoveries. We're also reviewing the optimal throughput scenario, and that will be delivered as part of our DFS in Q2. We will continue with the plan to sell natural occurring fines and those fines generated by blasting and crushing activities as DSO in conjunction with our SC6 product. The Stage 2 scoping study will consist of 3 work streams. We are looking at early production opportunities through the deployment of modular DMS units, allowing us to capitalize on the buoyant market driven by a structural deficit in supply. Also, the beneficiation of the natural occurring fines, which will initially be sold as DSO. And lastly, the third work stream is the production of feldspar as a byproduct to reduce waste disposal on site and to supply Ghana's growing ceramic industry. We have now finalized our flow sheet for stage 1, which allows for the processing at 3 different size fractions. Also, for the extraction of natural occurring fines in the initial stages, which can later be fed directly into the DMS middlings beneficiation plant. Both the DMS middlings beneficiation plant and the feldspar circuit can be rapidly incorporated after stage 1 ramp up as a bolt-on by design. Our exploration program for 2023 consists of 20,000 meters by auger drilling to identify anomalies and generate further RC targets over the larger Cape Coast portfolio. In addition, we will deploy seismic geophones to test for concealed pegmatite targets. Dependent on the results of this, we estimate 6,500 meters of RC drilling for these target-generating activities. In terms of resource development, we have 3,000 meters of infill drilling planned for the Ewoyaa South pit. This will give us optionality in terms of mining sequence and the location of our starter pit. We will also do 7,000 meters of RC step-out drilling along strike and at depth to test the Ewoyaa and Capricorn deposits. In support of our feldspar scoping study, we will analyze previous drill intersections to define a feldspar resource. So what can you expect from Atlantic Lithium in 2023? Firstly, the completion of our exploration and resource program to identify further upside. Delivering our DFS, incorporating the updated mineral resource of 35 million tons and taking into consideration various throughput scenarios. Receiving our mining lease approval. Progressing with our other permitting milestones, in particular the EPA permit. We will also be bolstering our leadership team as we achieve milestones and progress with the project. In closing, I would like to leave you with this snapshot of Atlantic Lithium. We have exceptional project economics with a post-tax NPV of $1.3 billion and a payback period of 20 weeks. We have significant exploration upside and we are geared up to become Ghana's first lithium mine. Thank you very much for your attention today, and we're just outside at booth number 47 if you want to drop by afterwards. Thank you.